Globally, there is a cultural, political, and economic Cold War unfolding that will likely lead towards World War III in the coming years. Now, this is a palpable feeling that most people have. They can sense that the world is not going in the right direction, and there's going to be more and more conflict as time goes on until we reach some sort of climax. I've been an international investor for almost 20 years. I've invested in real estate, private equity, business, and public stocks in many different countries through Asia, Europe, the Americas, and Australia. And I can tell you the United States is hands down the best place to do business and invest. However, there are many places around the world that look very interesting right now because valuations are so low in these other countries, and the situation is changing constantly, and they have presented new opportunities for US and Western investors to take advantage of these situations. I've been contacted by a lot of ultra high net worth investor groups recently to come speak to them and share where they should be looking at and share where they should be allocating their wealth right now. Because a lot of investors, especially in the United States, are locked up in real estate or private equity without much liquidity. So they're looking for opportunities in the short term where they can have huge gains with a clear exit liquidity. And that exists right now in many foreign markets. So recently I was in Washington, D.C. and was able to present to a small group. And that's the video I'm going to show you right now. I edited out a couple of questions from the audience to cut down on the total time and also to protect their identities. But there are lots of companies, ideas, and countries that I share with you in order for you to learn about where you should be looking in the coming years so you can act right now and educate yourself about what you should be doing as the world continues to have more conflict. And just of note, when I say World War III, that doesn't necessarily mean kinetic bombs and bullets. That certainly is happening in many parts of the world, but World War III may be very economic and cultural, and that means many people will have their wealth either lost through inflation or lost in situations where they're caught on the wrong side of a specific situation that is really the fault of a government. So if you understand that you need to be on the right side of this whole upcoming trend, you definitely want to watch this whole video.
Investing, and Cody's a guy that does these these trips to explore all these international investment opportunities where you actually get to be boots in the ground in all these random places and countries that I can't pronounce. I think you've been to Uzbekistan or Kazakhstan. You've probably been to all of them. And so he's just had a great story and a unique perspective that sometimes when you meet Plan B people, they can be all about we need to get money out of the country and because the United States is going to collapse. And then other times you get people who've actually lived some of this and are like, hey, the United States is actually pretty good. And so what I've appreciated about
America.
Cody is that Cody has been on both sides of that and has a very practical, common sense approach to both investing internationally, but also recognizing some of the benefits we have in the United States and walking that line. Go ahead, Cody.
Thank you for that intro. I will try and get to my personal experiences at the end if we have time, but this shot clock is making me nervous, so I want to get through this whole presentation. But just to quickly touch on what you said, who here loves America? Hell yeah, America. I am definitely a patriot and I am definitely pro-America, so don't think what you're going to see in this presentation is anything against America, but I'm also a rationalist. I like to look at things as they present themselves, and I'm going to present some possibly uncomfortable information right now, but as an investor, that's the best way to invest, right? Keep your emotions separate from it. My investing strategy in general is if I see a bunch of sheep in a trade, if I see a bunch of people running into something, I kind of want to stray the other way. Sometimes it's good to follow the sheep, especially as the past several months have shown with NVIDIA and other AI trends, but a lot of times historically that's typically not the position you want to be in, right? You want to be with the minority. You want to be early to something before people are really noticing what's going on, and you want to be in that uncomfortable position where you have to do research to create conviction for yourself to stay within a trade or stay within a trend. And again, the best outcomes or most upside is when you are the earliest before everyone else. Just like he said, go hire a professional and don't listen to me. Do your own research. All right, here's the uncomfortable parts. The US is expensive on so many metrics. It's almost impossible to find any metric that indicates it's cheap or is attractive, other than the fact that we have rule of law. And if you go out on the sidewalks or any street in America, you'll know when you step on a curb, it has a consistent height. When you go up stairs, there's a rise and run, and it's consistent, and you're not going to trip. You go all throughout the U.S., and you're thinking, what is he talking about? That's called rule of law. That's called consistency. That's called a civilization that abides by law. Go to Central America, go to Europe, go to Asia. What's going to happen? You go down the street, you start tripping on things. You're like, what is going on here? It's because when they build things, either they're not conforming to building codes, or they just don't give a shit and they break the law, and there's no one there to enforce it. And that doesn't seem like a big deal on the surface level when you're traveling to a different country and you're going, oh, this is different. This is strange. Why isn't it the same? But when you start doing business in other countries and you start investing and you realize that those same inconsistencies translate to other parts of the market and other parts of the economy, you realize, oh, that's why the US has a premium. Oh, that's why the US is safer to invest in. Oh, and that's why the US has been more successful for the long term. There's consistency, there's rule of law. That said, it's really expensive now, like really, really expensive. We're at nosebleed valuations. It's wild. So this blue right here is, you can just see it's going off the chart. That's why Buffett right now has the largest cash pile he's ever had. Now, to be fair, his cash pile is so big because he has so much more wealth, but it's also proportionally higher than almost any time he's ever held cash. So he's obviously getting into his much later years, and maybe he's lost a little bit, but I don't think so. That guy's wicked smart. And if he's holding a bunch of cash, it's because he knows that he's getting ready to redeploy once things get cheaper. This is the US and Canada compared. Canada is actually much cheaper than the US. I'm not going to be a fan of Canada right now because they have plenty of their own problems. But when you look at their market specifically, they're a resource-based market in general. Mining, oil, all of that. They're at a PE of about 18. The US is approaching 26, 27 PE, which is quite high. I've a lot of this presentation points out PE. I'm not stuck on PE. There's all kinds of other valuations. It's just the simplest one to understand, and I've picked that out for most of the companies I'm going to be sharing. And by the way, everyone has something to write, correct? I'm going to throw out a ton of companies in this presentation. I'm going to go through them quickly. So, well, we can review them at the end, but make sure you write them if you are interested. All right, what's on sale around the world? I'm sure many of you cannot read this. There's a lot of tiny numbers on here, but I'm going to show you that the US is number 28 here on this list. And this list isn't all the countries, but it's the major markets. And what you'll notice in here, a lot of America, in the Americas countries, Colombia, Argentina, Brazil, Chile, Peru, Mexico, all much cheaper than the US. And again, the US should have a premium. It should be more expensive, but some of these countries are like stupid cheap, like really, really, really cheap. Colombia with a PE of 5. See, Argentina 8, Brazil 8. These are really cheap right now. The America is so cheap, so close, so corrupt. So if you like 2 of those and you can forget about the third one for a little bit, embrace the Americas right now. You can see there's a downward trend in general for the valuations of the Americas. This is excluding North America. This is basically South America. If I could extend this chart out here a little bit, it was much higher during the resource boom after the 08 crash. If everyone remembers what happened after 08, everyone said, oh crap, I actually like gold now. I actually like tangible things to own. So resources went through the roof. So if it was over here, the lines would be up here, and it's slowly declined over to Brazil, Chile, Mexico, Peru, and Colombia, all having extremely attractive valuations right now. What's going to happen in their near future? I've got some ideas, but whenever you see something so cheap that nobody's paying attention to, it starts to get pretty interesting. Okay, first of all, Mexico. And I have a bunch of slides on countries that I'm going to ad-lib just off the top of my head. As Keith alluded to, I travel to a lot of these countries quite often. I meet with government representatives, companies, and try and get the pulse on the ground there. Mexico is very interesting, and people are totally ignoring what's going on in Mexico right now. Mexico is the %1 trading partner for the US right now. Last year, they were 15.2% of all trade for the US. Year to date, in 2024, they're at 16%. They're already up more, 0.5% from last year. And that's probably only going to increase. And it makes sense. We're neighbors with them. We share a border with them. This is very easy to trade with. Historically, there's been some tension between the two countries just because of geopolitical issues, but I would not be surprised to see our trade increase more and more. 80% of Mexico's exports go to the US. So no matter what Mexico does politically, internally, they are so reliant on the US that it's not even funny. They need us badly. I would not be surprised to see this relationship increase more and more and more. You can see the June total trade. This is June of this year. As I said, Mexico's trade has only increased with the US. And interestingly, Canada is now number 2 as a US trade partner. So China keeps slipping more and more. And that trend is going to continue. And by the way, on this entire presentation, I'm going to try and weave in geopolitics. It's something I'm passionate about, but it's also a way to forecast what's going to happen next. China is going to continue to slip down more and more. The US is making no attempt at all to patch that relationship. They're just disengaging more and more and more. And most recently, as everyone knows, even Apple's moving production to India with Foxconn leaving China. Brazil, very interesting right now. I don't necessarily agree with Brazilian politics. If anybody's been watching the Musk, the whole debacle that's going on there. That said, they're a huge country. They produce a lot of oil. No matter what happens there politically, they seem to always do trade with the US. I would not pick the Brazilian ETF right now, but PBR, which is their oil company, is very interesting. And it's interesting because, first of all, it's super cheap. They have a pretty high yield. They were actually, a couple months ago, their yield is up around like 20%. And the stock's gotten a little more expensive, which is why the yield has gone down. But the company's owned by 50% by the Brazilian government. So the government is very much in bed with wanting the stock to produce dividends. So if you are of the mind that a government is selfish and wants to do things their way, well, hop on their coattails, because this will probably last for a while. Argentina, there's my boy, Malay. I don't know if you guys follow him at all. If anybody hasn't watched this video, this will probably be one of the most classic videos in human history. What he's doing there is there's like the president little icon, and then it's like the vice president, and then these are all cabinets of the country, and it's like the most ridiculous departments you've ever heard of. It's like, minister of basket weaving and minister of, just ridiculous stuff. And he, during his presentation, he goes down there and he rips things off, afuera, afuera, which basically means get the hell out of here. We're going to eliminate all of this stuff. So he's been in office for several months now, actually since December of 2023, so actually a while. He's doing pretty well. The media doesn't report on it because it's one of those things they don't want to admit. Oh my God, this guy's right. Their housing is getting better. Their inflation's gone down. They have food security. They're increasing trade with multiple different countries, and they are on a pretty good track. That said, they're going to have riots down there because the pensioners who have been on the government dole for the past decade are getting cut. So all of a sudden, the people that aren't working, that were getting free money, are pissed off. But the people who are working, the producers, are saying, thank God my work is finally being rewarded and my capital that I earn is finally being preserved. There's an interesting situation in Argentina right now with their currency. Their currency has been trash for decades now. They were talking for a while about adopting the US dollar. Probably won't happen, but it's interesting. Any of you dollar bears, the dollar is still the healthiest horse in the glue factory, as I like to say. I mean, I'm not a fan of Powell. I'm not a fan of our domestic monetary policy, but it's a hell of a lot better than anywhere else in the world. So don't doubt the dollar, king dollar. They're also talking about Bitcoin, which is interesting. So any of you Bitcoin skeptics, just remember. Just remember. I'll tell you at the end of this presentation. Up there, you see an announcement. The next several slides for these South American countries, you're going to see these announcements. The United States and Argentina signed a memorandum of understanding to strengthen cooperation for critical minerals. It's kind of like a vague what's going on here. The U.S. right now, as I speak, this was released, a week and a half ago? They're going through Latin America right now, and they're striking deals with countries to establish trade relations for strategic minerals and resources. And the reason they're doing that is because the US and France are getting their ass kicked in Africa right now. And we no longer have access to minerals in the Sahel region, which is Mali, Chad, Burkina Faso, Niger, and just that general area. Very, very mineral resource rich area of the world. But we're getting kicked out. The Wagner group, which is the mercenary group from Russia, is in there right now. And they are basically kicking out private companies. They're taking over governments, and they are ruling these African nations right now. The US has more or less thrown up a white flag along with France, saying it's not really worth it for us to fight in this region anymore. Because number one, we are spread too thin around the world. But number two, there's lower hanging fruit in the Americas, which is literally physically closer, but we already have established relationships with these countries. So these announcements that have been coming out over the past couple of weeks are very interesting, and no one's paying attention to. But as an investor, you should think these countries are cheap, they have yield, and the US is establishing relationships with them. Something to think about. Chile, probably the cheapest country in South America right now, and surprisingly, we have great relations with Chile, even though we've overthrown their government and every other government in Latin America. Somehow we still have a good relationship with everybody. Chile, I mean, they're dirt cheap, like real cheap, even historically, you can see here. And this, remember earlier I was talking about the bump that Latin America had after 08 from the resources. This is what Chile looked like. What are they trading at, like $80? Now they're down like 20, 28. Would I expect that to rebound? Yeah, absolutely. I don't know when, but if you are a patient trader, this is definitely something to look at. PE of what, 4.5, 3 yield, it's under inflation. But you can read these announcements right here. So the US is saying, hey, Chile, you got a lot of lithium, we'll let you come in tax-free. We're also sending down forces to train with Chile. This actually came out yesterday. I didn't put it in the presentation, but we're down there. Our military is down there training with Chile. So we're very much embracing Latin America more and more as we leave Africa. Peru. ETF's kind of expensive right now. So, I mean, it's still 13, but it's kind of expensive compared to some other countries. Peru is very interesting, very, very resource rich, and we have relatively good relations down there. The country itself is a complete disaster, complete mess. I was down there a couple months ago, met with a finance minister. I think they're, as a government, pretty well situated. They just have some social unrest. So I probably wouldn't invest specifically in the ETF, but I would look at the ETF holdings. There's some mining companies in there right now that are very, very cheap, very interesting, and they have very strong trade relations with the US. And again, look, another announcement. This came out August 29th. What was that, a week ago? These are coming out as we speak. More and more of these memorandum MOUs with the US and other countries. Colombia. Keith and I have traveled to Colombia several times. I own real estate down there. I've been to Colombia. I've been going there for a better part of 2 decades now. It is super cheap. And it's got a pretty attractive yield. Colombia and the US have a surprisingly strong relationship. They actually have a free trade agreement. Very interesting business opportunity. If you ever want to go to Colombia and get products imported into the US, 0 import tax. It's almost as if it's a US state. You can import, export things freely between the 2 countries. Again, super, super cheap. And Colombia is a big oil and coal exporter. Coal is super cheap right now, huge yield. Ecuador, basket case, total shit show. But they, again, August 27th, they just announced this MOU as well. This is happening in real time. Investors are not paying attention to this at all. London Gold is the best known gold miner in Ecuador. I'm not really interested in this company at this price, but probably much more upside here. This is just to show that Ecuador is a huge resource player when it comes to gold. Guyana, fastest growing economy in the world. I've been spending some time down there the past several months. I actually met with the president 2 weeks ago, which is pretty cool. I've never met with the president before, but I got to sit down with him for an hour and talk about what's going on there. The 2 companies that are interesting right now is ExxonMobil and Tenaris. I can talk about Guyana for a very long time, but the short story is that Exxon is the largest US oil company, and the US will not let Exxon fail. Exxon is more or less an extension of the US government, so don't be afraid of any geopolitical action that's going on in Guyana. The US is completely backing that country. Tenaris, I think it's got a PE of 6 right now, has a 10-year contract with ExxonMobil. These are kind of reading in between the lines opportunities of looking at companies and saying they're very boring, but they have a 10-year contract with the world's largest oil player other than Saudi Aramco, and it's completely backed by the US. Guyana will be Exxon's #1 oil producing location, and they are only increasing their operations there. And Guyana itself as a country is very interesting. As you can see, their GDP per capita has almost quadruples since 2019, and their GDP is growing at 36% last year. They were at nothing, so it's easy to double your GDP if you came from nothing. But they're rapidly growing. So when I met with the president, the summary was basically that they are trying to diversify out of oil as quickly as possible. So if anybody here has a business where you are in healthcare, education, transportation, or tourism, you should get down there. Exxon spent $2 billion in Guyana in 2022, and they couldn't invest all their money because there's not enough people there, there's not enough talent, there's not enough companies to actually absorb the capital. There's only 800,000 people in the country. So if you want an adventure, go down there and you would be shocked. The government is ready to write checks to investors, to companies who are ready to establish their operations in that country. It's also beautiful there, the most insane nature I've ever seen. They have the world's tallest waterfall. It's stunning. Venezuela, this is, I don't know if you guys are watching the news. This might get interesting. So the US just seized Venezuela Force One a couple of days ago, which is Maduro's jet that he bought from a shell company that came from, I don't know, it was just it was a mess. But the US seizing his jet was in the Dominican Republic for some service, and the US said, hey, we're going to take your jet. They flew it back to Fort Lauderdale. The US has the capability to do much, much more, let's say, strength-showing initiatives to Maduro than taking his jet, but it's a complete sign of saying, look, Maduro, we are about to wring your neck if you don't change your direction. And the support that Venezuela has from Iran, Moscow, and Beijing right now is quite worrying, and that's why the US is strengthening its hold on the direction that Maduro is going. That said, look at their stock market. The Caracas Stock Exchange has absolutely crushed it the past several years. Their bank, here, one of their banks is up, 1.7 million% over the past 4 years. And that's not type, this is real. And what happened here, and this is a Biden strategy. Right around here, Biden lifted sanctions off Venezuela and said, hey, we're going to lift sanctions if you have free and fair elections. Well, we know what happened a couple months ago. Maduro was reelected for another 6-year term after being a dictator for almost 19 years now. But prior to that, the stock market took off. The reality on the ground in Venezuela is the economy has more or less been dollarized, which is super ironic. Again, King Dollar going to the one country that hates the dollar the most. The people on the ground in Venezuela are using the dollar. Venezuela has the world's most oil reserves. So they're an extremely rich country right now. And Russia and Tehran are in Venezuela right now, not only importing weapons, which is definitely concerning, but they're extracting gold. And that's how Russia and Tehran are getting around a lot of their sanctions. They're getting gold out of Africa, like I previously mentioned, but they're also getting out of Venezuela. And that's how Venezuela is functioning as an economy right now as well. There's a lot of gold trade going between those nations, as well as North Korea, and with other resources and rare earth minerals coming out of Venezuela. India. Okay, India's kind of expensive right now, but you can't fight the trend. There are so many people there that are going to be in a consumption age very, very soon. This is probably the best chart to look at right here. So this is the under 25 cohort, 43% of the population under 25. When this bulge gets right about to here, which is the 30 to 40-year-old age, so give us 5-10 years for this bulge to shift down to here. That's when people are having babies, sending their kids to school, buying diapers, buying shampoo, toilet paper. They're putting gas in their car, the consumers. And if you look at the baby boomer generation that's been basically since the 70s till about now, the US has had a lot of tailwinds, but one of the biggest tailwinds is the population. China had it after the US, and that's where China's kind of rounding this hump right now. China's in big trouble, by the way, because of the one-child policy. But India has surpassed China, is the world's largest country, and their demographics are very, very attractive right now. So no matter what their valuation is on actual companies, if you're interested in India right now, I would start looking at consumer products in India, cars, again, like the Procter and Gamble's of India. No matter what their valuation right now, they're probably going to do very well over the next 5 to 10 years. This is their ETF. It looks like this would be the worst time to invest, but this is one of those scenarios where I'm like, you know what, it's probably going to go up a lot more still. Again, it's kind of expensive, but they're going to have a lot of growth over the next decade. This is just to show that India has, this is India, it's kind of bad. There's two purples here. This purple is China, the other purple is India. But India has surpassed China in representation in the MSCI as a larger market capitalization. And the IPO market, so companies going public in India continues to increase. The amount of money is continuing to increase. So the people who are consumers, middle-aged people, yes, they're consuming, but they're also building. They're doers. They're making companies. So when you see a market that's exploding with more activity, not only with investors, but new companies, you can just see the economy is growing. And that's actually what's happening. Here's the India ETFs. Again, AUM just going up and the number of companies in those ETFs going up as well. Interesting statistic up here. Now 17% of the Indian households invest in the stock market. So domestically in India, 17% compared to the US is much lower. So just imagine if that was to double, let's just say 30, 40% of the Indian population started to invest in their own stock market. And that will happen as there's more electricity, internet access, tech, education. Their population is going to invest more in their domestic opportunities. So just their support of their internal economy is going to be a tremendous opportunity for investors who want to go to an international market. That yes, India has tons of problems, tons and tons of problems. Just like China did in the 80s, people thought, oh, China's not investable, it's a total mess. Well, China did very well, and India will likely do very well. Also, no matter left, right, communist, socialist, capitalist, whatever, demographics pretty much overrule all of that as long as you have a population who's having children, who's growing, who's getting older and consuming things. All right, this is the section that is the hardest to explain to investors, which is put your money in something, walk away, and do anything other than looking at your account or trading or selling. It's the hardest thing ever, and I think everybody in this room shares an interest in having intellectually stimulating activities, which is why we're all here. We like to see the next thing. It's why I travel, why I invest. I always like seeing interesting stuff. And when you have a finite amount of capital, it's always tempting to want to sell something and go to something else. Probably the best example for me personally, we were talking about it last night, Chris and I, about uranium. I invested pretty heavily in 2017, and the trade went sideways for like 3 years. And yeah, so I stayed in it, and fortunately, I did very well in uranium. I've not to say I've done bad in other trades, but it's a perfect example of just put your money in, this is what I tell my kids. Just sit there, don't touch anything, just stop it. So just think of that for yourself when you look at your brokerage account. All right, lithium. Lithium's super interesting right now. Everyone is talking smack about it because it's been a bloodbath in the markets. I'm not saying to invest in this right now. What I'm saying is to keep your eye on this right now because lithium production, or this lithium price, sorry, production shot through the roof right around here. Just like resource boom bust markets, the production will match demand, right? Well, right now with the price so low, these companies are starting to let off of their production, right? And a lot of them going bankrupt. So in the lithium market right now, there's some issues with companies losing money because the price is so low, so they're shutting down operations. There's M&A activity right now. M&A activity in resource markets typically indicates a trough or a peak. In a peak market, companies that are making a lot of money, say they have metals in the ground, they can sell for a premium because if their gold in the ground is worth whatever an ounce, but they can sell for a premium, that's when they'll get acquired or merge with another company. The opposite is true as well. When there's a trough in the market, companies cannot afford to run operations because the resource they're mining is so cheap, they got to go bankrupt or sell to somebody. And that's happening right now in lithium. So the demand for lithium, from right here in 2024, this is what, a couple weeks ago? By 2030, demand is projected to triple. So we're talking about a market that's going to have a demand triple, and the current price is based upon current consumption, which is 1/3 of 2030. 2030 sounds like a long way away. It's only 6 years. So getting into the trade in the next year or two might be very, very interesting. I would recommend just looking at, there's a bunch of ETFs. Don't cherry pick the junior miners. I've done that before in other markets. You might catch one or two 10,000% winners, but you're going to get your butt kicked with a bunch of zeros. There's a lot of miners who say, oh, I have this mine here, I've done this, I've done that, and I've physically gone to visit these companies, and you go there and you're like, you don't have anything, you just have like a land lease on some desert land. Very few miners actually know, or actually are doing what they say they're doing. Just buy the ETF. Let's see here. These are all interesting companies that I would keep my eye on right now. There's that Chilean company that has that tax treaty with the US that was just announced. Again, very cheap right now. I would not be surprised at all if lithium continues to decline in price. If you look at the lithium ETFs right now, they are just the dumpster fire. Like, do not touch right now. Okay, amazing. I will. Let's see if they're lying to us. They're the biggest producer in the world, by the way, and they're cheap right now. Here's that demand chart right here. So this is supply, demand. Talk about a crazy, that's scary, right? This is the base scenario of current production. So 2030 demand is not a little bit more than the projected production. It's like, what, at least double, maybe double and a half? I don't know what that's going to mean for prices, but if you're a patient investor who understands the bigger picture here, lithium's very, very interesting right now. And you have time for this. So don't think I got to go out and buy it. In fact, I'd wait. Just wait 6 months, a year. Just keep your eye on this whole trade. Lithium is, it's a metal. It's used for lithium ion batteries. There actually are better battery technologies out right now. I won't go into that whole story, but the manufacturing for lithium devices, phones, computers, cars, etc., EVs are by far the largest consumers of lithium. The manufacturing facilities have been built over the past couple of years and are continuing to be built are being built to process lithium and build lithium devices. So although there are other technologies here, I find it very, very hard to believe or see that another technology will take off for quite some time. The Widowmaker trade. Natural gas is cheaper, or the cheapest it's been in 30 years, not inflation adjusted. And this is hard to explain. I know there's probably some oil and gas people in here that know a lot more than me about this, but it's hard to explain how cheap this is right now because of how much inflation we've had over the past several years. I am much more of the opinion that our inflation has been, let's just say, grossly underreported. And so the price of natural gas compared to the historical price is almost mind-blowing that it could be this cheap right now. That said, the US has a ton of natural gas. We have an enormous supply, which has driven down prices. This is where it gets interesting. So this is the US energy production. We have surpassed consumption. So we're now a net producer or overproducer of natural gas. This is, again, every chart you look at, natural gas is surpassing petroleum or other fuels like coal or nuclear. This is what you want to pay attention to. We are actively, and this is the geopolitical side I was talking about earlier. These are uncomfortable topics to talk about, but we're in war right now. We are in a proxy war with multiple different countries, and most people don't know this. Going into the future, are we in World War III right now? I don't know. I don't know if we'll look back in time and say this is when it started. War into the future will much more likely be less kinetic, so less bullets, bombs, etc., and more economic, more propaganda, and more war around money and resources. And this is happening right now. So what happened with the pipeline from Russia into Germany? We blew it up, or Ukraine blew it up, or somebody blew it up. But somebody with interest of supplying energy to Germany blew it up. The US is by far the #1 importer of natural gas into Europe right now, and that's not going to change for a while. Europe is going to be very, very, very dependent on the US for lots of things. Other than military support, they're going to need US energy. This isn't going away. Look at this. This is their little red thing right here. That's the US. That's the US importing LNG, natural gas, into Europe. Kind of ironic how this is when the war started in Russia, how we just all of a sudden were available to import natural gas. Very uncomfortable facts to look at, but this is what's happening. So Europe here, you can see 2021, 2022, 23, I mean, just went off the charts with relying on natural gas. As we speak right now, the US is in Taiwan and South Korea and Japan brokering new long-term contracts for LNG for us to import LNG into those Asian nations. We are distancing those countries around China as well as Europe from relying on Asia or Russia and China. This is happening right now. And the reason why LNG is very interesting right now is we have a lot of it. It's very cheap, but it's highly likely as those other countries around the world that rely on us are going to have prices jacked up tremendously. So producers in the US are going to make a lot of money, but the transporters are going to make even more money. There's actually a brand new LNG processing facility in Baja, California that's about to open up, I think next year. That will create the availability for North America to export LNG to Asia without having to go through the Panama Canal, which is going to be much cheaper in transportation terms, but also it's going to allow ships that are much larger. So no longer are they going to be transporting on Panamax ships. They're going to be transporting on ships that are just gargantuan, going from the west coast of North America straight over to Japan, South Korea, not North Korea, South Korea and Taiwan, as well as the Philippines. Again, the Widowmaker trade, I'm super nervous about this trade, but I'm just like, I don't know what to do with this thing. It's so tempting. I just don't really know where it's going to go, but if I was going to, these are the companies I would look at right now. Total Energies is the #1 exporter of US LNG. Total Energies is the company that's going to be transporting the LNG from Baja, California over to Asia. Again, I don't know the date. It's very soon that they're going to open up that facility. Again, all of these companies are pretty much household names if you're in that oil and gas industry, and they're also have notorious reputations for being boom bust. That said, with the political entanglements we're creating right now, when I say we, the US, with these other countries, I see a pretty bright future for these companies to have, to be able to make a lot of money. All right, out of everything I've presented so far, this is probably the most interesting trade that I can think of, and I'll try to explain it as simply as possible. People have forgotten what platinum is and that it is actually a store of value. When you read anything about platinum right now, most articles will say, oh, we're going away from internal combustion engines, ICE engines, and platinum is used in catalytic converters, so we don't need catalytic converters anymore, so platinum is obsolete. But the thing is that platinum before catalytic converters was used as a store of wealth. In fact, it's more rare than gold. So if gold and silver have their comeback, which they are right now, gold is at a record high of $2,500 an ounce, non-inflation adjusted, highly likely the platinum is going to have its day too. So prior to 2010-ish, right around in here, when the whole narrative that I just explained with catalytic converters came into play, platinum and gold is highly, highly correlated. And if you were to extend it out before 2000, it's almost like lockstep. Gold goes up, platinum goes up, down, up, down, up. Somehow it just, I don't know what happened here, but platinum it's flat. It's almost weird. Since 2015, so almost for the past decade, platinum has really done nothing. The platinum to gold ratio is literally off the chart. So this ratio here basically says when gold and platinum prices are at certain points, you should either switch to gold or switch to platinum. And this is an investing technique if anybody knows about. You can do this with a gold and silver ratio as well. When you look at the prices that differentiate between the two metals, you say, hey, this is out of the historical trend. I mean, this is insane. This is crazy. The platinum ratio here to gold ratio is, it's obscene. So either the platinum trader is going to make a ton of money if you get in this trade right now, or platinum's obsolete, we're never going to see it again, and it's a metal that the world's going to forget about. I don't know. The world's a crazy place. Maybe we'll forget about platinum.
Maybe you need to talk about why gold is so popular. Russia and China are trading in it, so maybe you need to buy some platinum and then send a letter to their embassy suggesting they trade in that.
Absolutely, and in fact, I wouldn't be surprised if platinum is being pulled out of the ground in Africa South America and shipped over to the countries that are supposedly our arch nemesis right now. Silver to platinum ratio is also at a historic extreme. I don't know why, I think that slide got mixed up. Anyways, to invest in platinum, this is the PPLT. This is a physical platinum stock you can buy. It has like a, 0.6 annual fee. So this is how you invest in platinum if you don't want to stack the bars in your safe. There is a company, I can never pronounce it correctly, SBSW is a ticker. They're the biggest platinum miner. They're just, like there is an ugly chart right now. But if platinum's gonna rebound, SBSW, that's the most interesting company to look at for a miner. Silver, that other slide somehow got out of whack, but silver has been trailing gold. Typically when silver catches up to gold, it shoots way past it. And this happened in, again, after 08, 09, I was explaining with the resource boom. Silver like shot way past gold in price terms. Silver's catching up a little bit, but it's still really far off from gold. And that's typically, again, because the retail investor gets involved in the gold trade late. They go, oh yeah, gold is this thing that stores money. And then they go, oh wait, no, silver is actually even better because it has more volatility. Right now, I think silver is pretty interesting to get into. And again, the silver to gold ratio says right now to buy silver. It's nowhere near the extremes that platinum was on, but it is definitely more attractive than simply buying gold right now. Again, platinum it's so far off the charts that it makes me question what the future of platinum is. I've gotten so many trades wrong in the past. It's one of those things I'm like, you know what, maybe I'm wrong on this one. All right, I got some things, two trades that are just, really make me scratch my head. Coffee. We talked about shorting things earlier. I don't short things at all, but this chart's like, I can't. So this is Robusta coffee. There's Arabica coffee and Robusta. When's the last time it was this price? Well, actually never. It's never been this expensive. Coffee has never been this expensive. The last time it came even close was in 1994. If you go online and look at what's happening with coffee, it's the Houthis' fault. And it's the Houthis' fault is because coffee ships are avoiding the Red Sea. They're avoiding going through Yemen's backyard because they don't want to get bombed. So they're going around Africa, going to Europe, and Europe is paying the premium at their coffee shops for expensive coffee. Again, I don't short stocks, but wow, that's going to come down at some point. I don't know when, but that's going to come down. This one's crazy too. Cocoa, I don't know if you've been watching this trade. This is almost one of those meme stocks. I mean, this is absurd, right? Like this is crazy. I don't know if I'm going to short it, but this is going to come down. So going back to the platinum trend, going back to basically everything I've talked about in this presentation, these are boom bust cycles. This is going to come back down. There's going to be an oversupply of cocoa at some point, and this price is going to come down. Look, I ended it perfect with 1 second left. Isn't that impressive? So in conclusion, money printer go burr, buy a Bitcoin. I don't know if anybody gets that joke, but, and I spelled my email wrong, so don't email me there.